Most people think addiction is a personal failure, a lack of discipline, a weak attention span, bad habits multiplied over time. But what if that's backwards? What if some of the largest companies on Earth are designed around the assumption that you will lose control eventually? Not occasionally, consistently. Because the modern economy doesn't just tolerate distraction, it depends on it. Every vibration in your pocket, every auto-playing video, every limited time offer, every app that somehow knows exactly when you're lonely, bored, insecure, or tired. None of this happened accidentally. And the strange part is, the more distracted people become, the more profitable the system gets, which creates a weird economic reality. The person trying to stay focused is swimming against a trillion-dollar current. Because attention is no longer just part of the economy. Attention is the economy. And once you see how the machine works, you start noticing something uncomfortable. A lot of modern business models only function if people behave irrationally. Not disciplined, not patient, not fully conscious. Addicted. The old economy used to reward production. Factories, oil, steel, railroads. You made money by building things. The new economy still builds things, but increasingly, the most valuable companies in the world build behaviors. Think about it. Social media platforms don't sell a product once. Streaming platforms don't want you satisfied after one episode. Food delivery apps don't profit from your self-control. Online casinos definitely don't want moderation. And even companies that look unrelated are competing for the same thing: human attention. Which is why a teenager scrolling videos at 2 a.m. is economically valuable to multiple industries at once. The phone company profits, the app profits, the advertiser profits, the data broker profits, the energy company powering the servers profits. An exhausted brain became a supply chain. And over the last 20 years, this quietly evolved into one of the most sophisticated extraction systems ever built. Not extraction of oil, extraction of focus. In 2004, the average American spent around 2.5 hours per day consuming digital media. Today, it's closer to 13. That includes phones, streaming, gaming, laptops, tablets, background content.
Endless feeds. 13 hours. Which means for many people, more waking life is spent consuming digital stimulation than experiencing uninterrupted reality. And companies noticed something important very early. Human beings are terrible at resisting variable rewards. Casinos understood this decades ago. Slot machines don't pay consistently. They pay unpredictably. That uncertainty keeps people pulling the lever. Modern apps copied the same psychology. Refresh the feed. Maybe there's something exciting. Maybe not. Pull again. Notifications work the same way. Dating apps too. Even email. Tiny dopamine lotteries scattered across the day. And when millions of people repeat these loops daily, that behavior becomes measurable revenue. This is where the story gets darker. Because addiction used to be associated with substances. Alcohol, nicotine, drugs. Now addiction can be behavioral. And behavioral addiction scales globally at near zero cost. A cigarette company needs factories, shipping, tobacco farms. A social media platform can addict 2 billion people with software updates. That's a very different economic machine, especially when investors reward engagement above almost everything else. Watch time, daily active users, retention, session duration. Notice how almost none of those metrics measure whether people feel better afterward, only whether they stayed. And that changes how products get designed. If outreach increases engagement, platforms slowly drift toward outreach. If anxiety keeps users refreshing, the algorithm learns anxiety works. If loneliness increases consumption, the system has no financial incentive to solve loneliness permanently. This doesn't require evil people in a secret room. That's the interesting part. Most of the time, it's just incentives. Cold math. A company discovers that a certain feature increases user retention by 11%. Stock goes up. Competitors copy it. Now the entire industry evolves in the same direction. Not because anyone planned a dystopia, but because the market rewarded the outcome. There's an old saying, what gets measured gets managed. The problem is, modern platforms measure attention better than humans measure well-being, and attention is easier to monetize. A calm person who reads one book carefully and goes to sleep on time is economically less valuable than someone endlessly clicking, scrolling, ordering, reacting, and impulse buying until midnight. That sounds cynical, but look at the numbers. The global advertising industry is worth nearly $1 trillion. Not because products suddenly became harder to manufacture, because human attention became harder to capture.